Good evening, ladies and gentlemen. I am Karthikeyan, moderator for the conference call. Welcome to ONEPOINT Solutions Limited Q3 FY26 earnings conference call. As a reminder, all participants will be in listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on a touch-tone telephone. Please note, this conference is being recorded. I would now like to hand over the floor to Shashank Ganesh from EY. Thank you, and over to you, Shashank.
Thank you, Karthikeyan. Good evening to all the participants on the call. Before we proceed, let me remind you that the discussion may contain forward-looking statements that may involve known or unknown risks, uncertainties, and other factors. Therefore, it must be viewed in conjunction with the business risk and could cause further result performance or achievements that differ from what is expressed or implied by such forward-looking statements. To take us through the results and answer your questions today, we have the senior management of ONEPOINT Solutions, represented by Mr. Alfa, Full-Time Director and Global COO, and Mr. Sunil Kumar Jha, Chief Financial Officer. We will start the call with a brief overview of the past quarter by Mr. Karnik, followed by a Q&A session. We would appreciate your cooperation in restricting yourself to 2 questions to allow participants an opportunity to interact. If you have further questions, you may join the queue, and we will be happy to respond within the time permits. With that, I would like to hand over the call to Mr. Alfa.
Thank you, Shashank. Good evening to everybody, and I would like to thank all our investors, partners, colleagues who joined us in our opening call with ONEPOINT's earnings call today. While we've been a listed company for nearly a decade now, we would like to begin engaging more closely with analyst investors, and we believe we have a very interesting story to tell and showcase the community. I'd like to give you an introduction to our company along with our CFO, Mr. Sunil Jha, and we shall walk you through the quarterly numbers shortly. To open the floor with the Q&A post which. ONEPOINT Solutions was established in 2008. Our early years were invested in becoming a very reputed business service partner in the BPM and KPM industry. We spent the next decade developing process excellence, built a strong base for reputed clients, and then eventually in 2017, we went public on the NSE, followed by moving it onto the main board between 2018 and 2019. During this period, we turned our focus into diversifying our revenues, entering into the BFSI sector, developing our IT verticals, and using it and making it more profitable through our omni-channel solutions and expanding it consistently. Over the next few years, we increased our global exposure in line with our goal to cement ourselves as a very competitive BPM service provider. We added a lot of domain specialists and increased our broad-based expertise in the entire market. In terms of our growth story, in 2023, we established an entity in Delaware in the US, and we built a dedicated US sales team. This was followed up by an acquisition for ITCube Solutions in 2024. Expanding our verticals in healthcare, record retrieval, legal services, analytics, with an aim of completing our IT solutions development too. This acquisition added 2 new locations, Pune in India and Cincinnati in the United States. This provided us a strong foothold in the US market. This company has fully been integrated in 2024 and has started delivering growth for us. We are looking forward for a 25% organic growth in the next year. Most recently, in 2025, we made a major acquisition of Netcom, one of the largest BPM companies in Costa Rica. With a rich heritage of servicing most of the most prominent banks in Latin America, it adds to our BFSI capabilities that we basically built across India and other few continents. This creates a new entry into the LATAM region by providing nearshore as well as offshore operations for ONEPOINT Solutions. This acquisition is expected to be completed by 31st March 2026, and you'll find the more details in our quarterly investor presentation. During 24-25, we spent some good amount of time really thinking and looking at what should be our way forward, and that's where we revolutionized our entire new way of customer experience and how we should handle it. We realized that the AI vertical was really growing in leaps and bounds, and generative AI, or what we call as commonly Gen AI, is something that is the way forward for all the companies. We use this time to try and build up and optimize our CX process, improve outcomes, and also train domain expertise to really look at more favorable outcomes for our partners. We proceeded to put in our ideas to practice, spending about almost 2 years into creating an entire suite of solutions in-house, optimizing agents, and our own agentic AI solution. We developed our own middleware and standardized queries and took help from domain specialists to train our bots to be more proactive, autonomous in taking initiative and making decisions. These bots can maintain context over long conversations, adapt in real time, lending as well as to try and bring the environment to life. We then took our proof of concept to several clients and proceeded to test our solution in real environment and saw a great amount of acceptance, and people loved our cost efficiency and productivity, which gave them immediate results as early as 40% improvement in certain cases. Off the back, our AI product and platform stack, they were awarded Technology Innovators of the Year by the World Innovation Congress in 2024. We won the Best AI ML Driven Data Center Award in 2024. And also recently in 2026 January, we won 3 awards at the ELATS AI Summit, including Customer Experience AI Solution of the Year, AI Powered Analytics Solution of the Year, and being the AI Leader of the Year. This was extremely commendable in terms of our growth journey and getting a recognition for ourselves. In terms of growth drivers for the future, we strongly position to capitalize on our unique AI stack and our decades of experience to expertise across industries and processes for inorganic opportunities. We have a strong inorganic pipeline in place, and we plan to make at least 2 to 3 acquisitions over the next few years. We will look at acquiring almost profitable companies of similar size and incorporate our agentic AI to strengthen the core offerings and operations to further improve profitability, make our invest more value accretive than the deal itself. This will be in addition to our organic growth, which will be derived across selling to existing customers and our premium customer base pricing. We believe that we are on a precise opportunity in terms of optimizing our operations both from an existing client as well as the new prospects that we are going to keep winning quarter on quarter and year on year. Our technical expertise is at its epitome. We're going to look at strategically inorganic acquisitions along with Canvas Flat that have helped us to really transform our delivery from a backbone into AI first engine that maximizes precision, speed, and making it a global scale for all of us. And with this, we aim of becoming a top line of about 2,000 crore by 2030. With that, I would like to hand over the call to Mr. Sunil Kumar Jha, our Chief Financial Officer, to take you through the numbers for the quarter and the 9 months ending 31st December 2025. Over to you, Sunil.
Thank you, Akash. And good evening to all the participants who have logged into for this call. I would like to begin my remark by discussing our financial performance for Q3 and 9 months of financial year 25-26. During Q3 financial year 26, our revenue from operation was INR 77.3 crore, reflecting a robust 9.1% quarter-on-quarter growth and 17.7% year-over-year increase from Q3 financial year 25. This growth was broad-based and driven by our customer increasing program volume. Our EBITDA for Q3 financial year 26 stood at INR 22.8 crore, a 5.2% increase from 21.7 crore in Q2 financial year 26, while our EBITDA margin has reduced by 170 bps from Q3 financial year 25. This is due to high R&D investment to develop our AI stack. We continue to observe efficiency generated by our agentic AI, which is expected to drive margin upward over the next few years as we scale up our operation. Moving on, our PAT for Q3 was 8.6 crore. However, I would like to call out that this includes a one-time exceptional expenses of 1.5 crore related to the new labor code regulation. Our normalized tax would have been around 10.1 crore, which would have reflected a 2.6% growth sequentially and 19.9% growth over Q3 financial year 25, showing meaningful improvement as our revenue scale up. Coming to 9 months financial year 26 results. Revenue from operations stood at 12.9 217.2 crore compared to INR 189.3 crore in 9-month financial year 25, representing a year-on-year growth of 14.7%. Our EBITDA has improved significantly from 9 crore in 9-month financial year 25 to 65.1 crore in 9-month financial year 26, indicating a growth of 14.4%. Our PAT has also increased by 14.4% from 24.1 crore in 9-month financial year 25 to 27.9 crore in 9-month financial year, resulting in margin improvement of 30 basis points from 12.8% to 13.1%. To summarize, Q3 has demonstrated elevated level across almost all key operational and financial metrics. Our growth strategy is anchored in well-balanced combination of steady core revenue, ramp up of new customers, and a strong diverse pipeline of opportunities. Our priority remains profitable growth, enhancing end customer experience, and creating efficiency for our customers. We are at beginning of multi-year journey of growth, driven by our unique stack of scalable AI solution with proven experience in live environment. We will continue to invest in talent and innovation that will strengthen our foundation for long-term growth. Looking ahead, we remain focused on sustainable profitable growth through disciplined execution and operational excellence. Thank you. With this, I am handing over to Shashank.
Thank you. I would like to now hand the call to the moderator to open up the floor for Q&A, please. Over to you, Karthikeyan.
Thank you, sir. Ladies and gentlemen, we will now begin the question and answer session. If you have a question, please press star and 1 on a telephone keypad and wait for your turn to ask the question. If you would like to withdraw your request, you may do so by pressing star and 1 again. Ladies and gentlemen, if you have a question, please press star and 1 on a telephone keypad. We'll wait for a moment while the question queue assembles. We have the first question from the line of Nachiket Kale from Jagannath Ventures. Please go ahead.
Yeah, hi. Thank you. Am I audible?
Yes, sir. Very much audible.
Yes, great. Good evening, sir. Amazing results. Congratulations on your performance. Looks like we are set for a transformative growth journey. My first question is around our strategy for growth, especially regarding international expansion. So we have some global contracts underway. So how are you balancing organic growth versus our history of acquisition-driven expansion? And I guess your majority of the growth is coming from LATAM and Europe. So could you just describe what would be the focus and any strategic priorities for these areas?
That's a good question coming from you, but our focus is very clear. We will be growing organically across the geography locations that we have. We are growing in India and its own geography. We will grow LATAM in its own geography, and we will try and bring in our agentic AI solutions across these geographies to try and leverage our position for their existing customers and interest the new prospects to really get in to see how our transformation story can really bring in a lot of better ROI and improvisation for them. So the organic growth will continue at a rate of between 20 and 25% for each of these entities that we are currently doing. And inorganic will continue between 20 and 25% of the growth. And inorganic will continue, as I said, in terms of we've got a good pipeline with 2 to 3 companies to be acquired in the 2 times. It will take its own speed and own pace. And the focus to grow inorganically will also continue at the same point of time. Both of them are equally at this time.
Right. But like which geography is seeing like faster traction or higher growth? Like which would be the number 1 or number 2? If you could just mention that.
I mean, there are no guesses for getting this answer right. The international geography, specifically for United States, will grow at a higher pace. Eventually, about 12 months though. And India will continue. And purely because of dollar arbitrage, the numbers might look bigger, but the focus from its own partners would be around the same percentage growth there.
Okay, understood. The next question. Yeah. Hello.
Yeah, go ahead, please.
Yeah. So as we are seeing some, competition is also intense in the BPM analytics and even digital services. What would be the differentiating factor or a right to win, and which can, translate to the ambition of logo wins and becoming a preferred partner for potential existing clients and potential clients?
Good one. So if you see in our market today, everybody's trying to take foot in the door by trying and selling them an agentic AI platform. And that's where we differentiate ourselves from others. We are not selling an agentic AI platform, but we are clearly positioning ourselves as a genetic AI service solution partner. Service is the way to really try and close to them. Most often than not, market today, people have these mixed emotions of whether genetic AI or Gen AI today that we so call is going to be successful or it's going to be failing. And there are two sides to the map. And that's where we come in with a very great saying that we are here to offer you a Gen AI solution and service which will make you meet your objective towards your end goal that you want to do. We walk you through to make sure that your customer journey in terms of customer acceptance of the Gen AI solutions are met in a given timeline. And our capabilities are defined in such a way that each of our domain expertise understands the use of human intelligence to be developed into Gen AI and what's the journey to be try and meet its end. So that becomes a very compelling proposition from our side for customers to stay with us in the longer journey and build that equity along with us to try and be there with them, and we are able to win over our competition.
Yes, absolutely. That I view of interests are aligned for you and the company to have a long, fruitful journey.
Thank you very much.
Yeah, great. Thank you so much for your time and best of luck for the journey.
Thank you so much.
Thank you. The next question comes from the line of Deepak Kumar from Ray Investments. Please go ahead.
Hey, hi. Thank you for the opportunity and good set of numbers. Congratulations. I have two questions. So, what separates our AI stack from the other industry?
As I said, Deepak, that's a good question, but as I said that we are more focusing ourselves in terms of deploying AI as a service rather than AI as a platform. While our AI stack is fairly complex and we use the leading technology of the world to try and do it. But today in this world, it's not about the differentiation in AI stack, but it's about how beautifully can you implement it using the domain expertise and bring it to life. What's the right balance that you can bring in between technology and human-based solutions to try and merge it seamlessly to give the desired outputs? Just you should know that various kinds of AI stacks fail because of the lack of the domain experience. But what we bring in life today is not the differentiation on the AI stack, but the domain experience to really implement the AI stack in a live environment to make it live and acceptable to the end customers of our principal B2B partners. Does it answer your question?
Yes. And who will be our peers in the industry? I would say Perso, C-Club types or.
Absolutely. All big players in the market today are our competition, and in fact, I would try and give this answer a little differently. The big boys of the world today are finding us as their competition because we are very fungible, we are malleable, our solutions are very easy to deploy, we are faster to the market than those big giants who find it much difficult with their entire large structure to really make it moving to the customer. So even the large customer-centric organizations are looking at far more flexible people and flexible players who can really bring to life a solution at a faster rate and higher accuracy. So it's actually become an inward pyramid.
Okay. And how are we finding it to deploy in the market? Like I would say, like what is the duration in which we can acquire the client if you, let's say, for example, in 2-3 months, or how is it?
In the last quarter, we've seen some great amount of acceptance where we've been able to do it. So we've been able to stitch it through all our service offerings, and a sizable amount of our solutioning is GenAI based, which is stitching through the customer in their entire journeys today. So we are already deployed. Last quarter saw some good transition and deployment on the GenAI platform across travel, tourism, hospitality, automobiles, a few on the edutech as well as on the banking side as well. I think in the coming 2 quarters, we should really look at moving this by a great 50% from what we see in the previous quarter as a number. And I think it's just going to add more value, and more customers are going to go by a referral basis, seeing our positive implementation of AI solutions.
Okay. And one on the financials. What are the levers to improve margins going ahead?
Our margins will only increase because we as an organization are not a price player, we are a value player. So we are not compromising our margins and trying to get into the market, but we are trying to improve value to the customer and to us. So with every new customer that we are currently acquiring in the market, it's a value proposition, thereby not compromising on our base product, and even our value-based products or on the GenAI product solution, it's got a good amount of win-win for both the sides. So that will eventually go and show it up in terms of our bottom line very quickly and very fast.
Okay. Thank you, and all the best for your journey.
Thank you.
Thank you. Ladies and gentlemen, if you have a question, please press star and 1 on your telephone keypad. The next question comes from the line of Aditya Kumar from SD Investments. Please go ahead.
Hello sir, good evening, and thank you so much for giving me an opportunity, and congratulations on the good set of numbers. So I just have one question. I just wanted to know that how do you plan to achieve your revenue aspiration of 22,000 crores in the next 5 years? And what capabilities do we want to acquire next for this to reach the milestone? Are we looking at any particular sector in terms of an opportunity to grab into, or how is it?
So we've got a healthy pipeline. When I was introducing the organization, as I said, that we've got sizable opportunities really knocking our door, and we will make the right balance, which are more EBITDA-accretive companies and which have got good value in the market. So every year it's going to only multiply our revenues, if not more, by at least 100%. Now that is the way we'll be able to meet our ambitious number that we currently set in about next 2 to 3 years. So that will take it to about 2030, and we should be able to do that. As regards any specific industry or value, we are looking at leveraging our GenAI solutions across large-scale retail industries. Retail could be on the financial side, it could be on travel tourism side, it could be on e-commerce side, or it could be largely on healthcare side too. Again, agnostic to industries, but we are transactions where GenAI solutions can really play a great role, and we are able to try and improve the interactions and digital play over there. So our focus is volume-based organizations which have got very marquee customers and can get us a market presence between US, Europe, primarily will be the focus to really try and expand for us.
Understood, sir. I think that's what I wanted to know, sir. I'll join back the queue, sir, if I have anything.
Thank you.
Thank you.
Thank you. Ladies and gentlemen, if you have a question, please press star and 1 on your telephone keypad. I repeat, ladies and gentlemen, if you have a question, please press star and 1 on your telephone keypad. We have the next question from the line of Smith Gala from RSPN Ventures.
Yeah, thank you for the opportunity. So as we mentioned that we are looking for a 25% organic growth. So Just wanted some clarity that this organic growth number will be pegged upon around 280 to 90 crores we'll be doing this financial year, and from on that number should we understand that organic growth will come, or this 280 plus 25% plus the acquisition which will be completed in March, around March, and so that will be additional.
We are looking at an organic growth of 20-25% on every financial year that we basically close on. So we're not splitting it between organic, inorganic and each one of them, but whatever we close from the previous year, we will be able to grow organically. Even our acquisitions will grow, even our existing businesses will grow. So the number of 25% is going to be on every year closing. We are looking at going up 20-25% based on that.
Okay, that is on unconsolidated level. Okay. Yeah, thank you. That was from my side.
Thank you. We have the next question from the line of Maitri Shah from Sapphire Capital. Please go ahead.
Yeah, hello, am I audible?
Yes, you are audible, Maitri.
Yeah, hello, good evening. Just one question. So we recently acquired a company in Costa Rica. Any sort of visibility you see? What sort of opportunity size are we seeing from this company in the next 2 to 3 years? And secondly, just a clarification. So you mentioned that we'll be acquiring 2 to 3 companies. Is this in the next 2 years or in the next maybe 5 years?
Good. So let me first try and give you a little bit of holistic view of Netcom as an organization and how it's going to really help and open the canvas for us. So Netcom has a very large presence in Latin America, specifically between Costa Rica, Colombia and Panama. They have a very wide presence and acceptance in the entire banking and financial sector. They lead the market share by leaps and bounds. So the next in line player who is in competition is about 18% of their entire value. That's the kind of a differentiation this company brings in their market. Our agentic AI solutions and our tech platforms are so strong that we will be able to use our technology to penetrate into the LATAM market and give them a great amount of technology upliftment and a better customer sense from a CXDX perspective or a digital transformation perspective, and that's been our viewpoint. There are a lot more business to really do between these countries from entire BFSI sector as well as the e-commerce sector at that side. Alongside with this, with a nearshore presence, we believe that we'll be able to take this experience of banking and financial sector and bring it down to North America, where they will see a lot of merit and the likewise businesses to really trust upon banking business in the North America. And that's where we want to try and bring in our global expertise on the banking side across nations. Coming to the second question, we talked about acquisition. We are looking at about 2 to 3 acquisitions in about next 3 to 4 years or probably even more. But our horizon right now that we are looking at is between 2030. That's about 4 years. So about 2 to 3 acquisitions in the next 3 to 4 years is what we want to consolidate.
That's great. And any geographies that we are specifically looking at for these acquisitions? Is this North America or maybe Europe that we want to expand to? Any particular geographies and also any particular sectors that we're looking for? Because you mentioned that we're going to be looking into more domain expertise. So getting into any specific sectors here?
We want to become a large global conglomerate in the next 2 to 3 years, which will definitely ask us to look at interest in North America, Europe, maybe a little bit on the Eastern Europe as well as on the Western Europe side. And this is where the growth lies to become a large global conglomerate. So this is where the focus is. As regards industries, I think globally the same industries which are currently growing, which is e-commerce, PTH, NBFCs, fintech, these are sectors to grow, but we will also be very keen to try and see how we can expand our healthcare vertical, which has got great propensity to really grow today and has a best case use of agentic AI.
And not any expansions in the Southeast Asia side? Maybe those countries are we targeting right now?
We will be looking at Middle East as a sector to grow from a business perspective, and we might even have a small tuck-in acquisition there. But large growth sectors that we're looking at will probably be more on the Europe and United States side.
That's okay. And how do we see our margins scaling up with these acquisitions in the next 5 years? Because you mentioned you'll have a 2,000 crore top line, and that will 20-25% is the growth we are targeting. So how do you expect these margins to scale up over the course of the next 3 to 4 years?
See, our acquisition strategy is very clear. We are looking at EBITDA accretive companies to really try and unfold into us. So the minimum that we will be doing is holding our margins constantly with this great consolidation number that we do. And at about between 20 and 25% of EBITDA margin is a steady growth with good consolidation should hold us good in the market well.
Any quantified number that you want to have by 2030, if that's possible?
It's too early to really try and make those predictions, but our focus is to really consolidate to the large conglomerate, reach a large number, hold our margins well for our investors and stakeholders here thoroughly.
So for the next, I would say 1 to 2 years, can we expect these range of 25 to 26% EBITDA margins for the next 1 to 2 years? Is that maintainable?
Yeah, that's the objective, to really stay afloat, and we should be able to do that. We've been successfully been able to hold the numbers, and we should be able to do it with our acquisitions as well.
Okay. Now, thank you so much for answering the question.
Sure.
Thank you. Next, we have a follow-up question from Aditya Kumar from SB Investments. Please go ahead.
Hi, sir. So just a question on deals. I wanted to understand what is the deal win duration and what is the deal size that we look at usually?
Typically, we are looking at deal sizes between $50 and $60 million that we're looking at, and any deal varies between 6 to 9 months, and some deals can even happen earlier between 4 to 7 months. So if I take a midpoint, it should be range between 6 to 9 months is a range to really get a deal coming through. But that's also, in my opinion, is a very fast deal to close on.
Okay. So and as of now, what would be the largest deal size that we have had?
We just had 2 deals, so the last deal that we closed is the largest one.
Okay.
Recent one we just come one.
Okay. All right, sir. And do we have any industry focus where we are penetrating, like maybe let's say BFSI or let's say education or pharma?
See, we are an industry agnostic organization, but our largest focus has always been BFSI, and we have a very strong customer base. Almost about 55% of our large customer base across the globe is BFSI. We would want to continue to grow in BFSI and add in new verticals to grow equally. So maybe healthcare, travel tourism, e-commerce, other verticals, which is where we are wanting to focus and grow as well.
Okay. Understood, sir. That's all from me. Thank you.
Okay.
Thank you. Ladies and gentlemen, if you have a question, please press star and 1 on a telephone keypad. Next, we have a follow-up question from Nachiket Kale from Juggernaut Ventures. Please go ahead.
Yeah, hi. Thank you for the opportunity once again. My question is more broad-based. I know we have been taking up such transformative projects. We are helping our clients, and growth trajectory is very solid, as you answered on the few previous questions as well. How are you seeing the talent pool availability and skill set upgradation among the talent pool? Can that be a little bit of a roadblock, or is that, I understand the attrition may not be high and salaries have found salience in the last 1 year or so, but overall, could you comment on the talent pool availability?
I think that's the question which I was expecting, because growth in the BPM sector definitely cannot be answered without the talent pool. But here is what I think is what we stand a good chance. The reason for us to grow globally is to really have a divide and conquer strategy. Now let's look at our LATAM case recently we've done. Let's say we grow in the Spanish market, we've got 3 countries to really spread out between Costa Rica, Colombia and Panama. So you have a large customer base who's basically trying to grow with a divided strategy to really win. I think you stand a good chance. Secondly, this industry has actually matured a lot over the last about 2 decades, and the manpower availability is more and enough available. The problem is on the pricing strategy where a lot of customers are not able to really hold their own because they're underpricing it. And as I said earlier, we are doing a value-based pricing business, and so we're not cutting down on the price as a proposal. So we are very good to hold on our own, invest with our employees, invest with our shareholders, and bring value to everybody on the table today.
Right. And have we taken some internal initiatives for upgradation of skills, or because there's such a big thrust on AI, maybe some of our older staff may not be up to the mark or need much more advanced training. So how is that being addressed?
Training is a continuous form in our industry, so we keep on training and retraining our people at all periodic intervals, not only just at intervals but at all levels. So our people who one of the oldest is becoming our strength because they understand the industry very well, and we've used their understanding to develop human-based AI solutions. They are the ones who are giving us more insightful information, and they are helping us to bring that human touch to the market. So everybody in the company is so valuable that they are adding value by the day, by the hour, and we are helping everybody to really adapt to newer technology, newer generations, and collectively we are able to march ahead.
Correct. So the veterans may be more involved on the architecture side, and newer ones will be on the execution side.
The veterans are helping us to fathom, understand the customer behavior in the industry and what basically helps them to meet the humanized experience and what are the customers looking at. And they are also contributing to help the AI platform by using good prompt engineering, telling them where should we try and do it to build a better CX and a higher ROI at a shorter span of time.
Okay. So headcount addition, if any, will be more required on the more experienced side or on the younger growing side?
We are open to everybody, but we will take on the front end side will be the newer younger generation who anyways are well equipped with today's digital platforms and AI platforms. So that change in talent pool itself is getting a good combination of educated, newer, advanced technology people at the same point of time. Our people from the past are adding on to them. So the platform is shifting and we're finding well qualified people to get the right mix.
Okay, great, sir. Yeah. Thank you again for the opportunity.
Sure.
Thank you. Ladies and gentlemen, if you have a question, please press star and 1 on a telephone keypad. Next, we have a question from Manav Koyal, an individual investor. Please go ahead.
Hi. Thank you. Thank you for the opportunity and congratulations on a strong set of numbers. So I have a couple of questions. First, I wanted to understand if we have any presence in the healthcare or the pharma segment, and also which industry vertical that we operate in offers the best margin profile. Am I audible?
Yes, sir, you are audible.
I'm sorry, I was on mute. I beg your pardon here. So we offer services in the healthcare industry, but healthcare is a very wide range of industry which includes certain segment of insurance as well. We operate in a segment called as record retrieval, which is a very significant element and part of the entire healthcare industry, where we try and do medical summarization to try and build medical files in a chronological sequence based on our automated platform. Now that is a very large industry, roughly about a $50 billion industry back in the United States. And we hold the top 4 customers in the great segment over there. So that's how we are currently doing the work in the healthcare, and we are marching towards other segments of healthcare industry as well. Now, with respect to which industry and which segment provides a higher realization is a very difficult question to answer because every deal is unique depending upon how they want, what kind of services they want, and how we are able to provide a value-based offering to them. There's enough and more opportunity across sectors, and what we are trying to build is a value-based proposition system to each of our industry service solutions that we are currently making for them.
That's very clear. Thank you.
Sure. You're welcome.
Thank you. Next, we have a follow-up question from Smith Galla from RSPN Ventures. Please go ahead.
Yeah, thank you for the opportunity again. So wanted to understand what sort of risk does our business face in terms of insourcing from our existing customers and the evolvement of AI which is happening continuously. So does it possess any risk or margin pressures because of the evolvement of AI?
We ourselves have taken AI under our spectrum, and we offer AI services to really try and improvise on their entire customer journey. More so, it becomes more effective for us if somebody.
Hello, sir, your voice is not clear.
Is my voice audible now?
Yeah, it is audible now. Yeah.
Risk on insourcing and AI base is extremely low for us because we as an organization are AI built. Can you hear me? There's some disturbance on the call, but can you still hear me?
So you're audible, so please go ahead, sir.
Yeah. So we don't face a lot of threat on that. Our entire focus is to try and bring in a service platform of AI, which helps a lot of organizations to really propel ahead in terms of how do we bring AI to life, and we've been successfully able to do that. As regards insourcing is concerned, it is a far more expensive affair. Unless an organization is really going down on its volume, they will not look at insourcing. So if they are going down and then they are insourcing, then I think it's the right strategy, and it shouldn't really concern us because then we are risk averse to all these and they are taking the risk away from us. So from a risk perspective, I think we are very covered on this side and there's nothing to worry for us.
Yeah. Do we see companies like Sagility or Indegene or IKS, Inventurous Knowledge Solutions, as our competition in any of the segments we play in the healthcare?
Yes, they do. They definitely are our competition in the healthcare segment, and we are competing with them neck to neck, trying to bring our presence and take a good stage ahead there.
Okay. Thank you. That's all from my side, and all the best.
Thank you. As there are no further questions, I would now like to hand over the call to the management for their closing comments.
Okay. Thank you very much. It was pretty encouraging to really have the questions and keep tracking us, and we shall be coming back to you on our quarterly stories to keep you guys engaged. Thank you very much and have a wonderful evening.
Thank you.
Thank you.
Thank you, sir. Ladies and gentlemen, this concludes your conference for today. Thank you for your participation and for using Boost Conference Call Service. You may disconnect your lines now. Thank you and have a pleasant day.